Good morning, everyone. We're back again for another market update for the markets today. Of course, this afternoon we do have the Bank of Canada interest rate meeting. And obviously starts the run of successive interest rate meetings over the next couple of days. Now, tomorrow we've ECB, which we'll be doing another preview in the morning. And of course, late in Thursday night into early Friday morning, we have the BOJ on the wires as well. So I suppose the point of note this week in the markets is, of course, risk aggression. We've talked about this idea of would the markets rally into the early November Fed meeting? It looks like that's actually playing out quite cleanly. We are seeing dollar weakness, we are seeing safe haven weakness, and we are seeing pretty much all risk orientated assets or assets against the dollar at new highs for the month of October. So if we get started this afternoon, of course, as we said, we do have the BOC interest rate meeting. Expectation is for another 75 basis point increase. In our Discord, we actually have published this video or this article as well. Just a bit of research for those who like to trade the fundamentals or like to trade the news as well. So as things stand today, if Bank of Canada raise 75 basis points, which markets are expecting them to do so, they will be the first of the G7, G10 central banks to get to a 4% interest rate. Now, we are expecting ECB to raise rates tomorrow. We are expecting the BOE to raise rates soon as well. And of course, we are expecting the Fed to continue on their rate cycle as well. So it's all about factoring all of this into consideration collectively. Now, if you're looking at interest rates, the globalinterestrates.com website will give you the breakdown of where each central bank is in relevance to each other. And of course, being able to get a clear logic broadly beyond that. Now, tomorrow, or with today's interest rate meeting with the Bank of Canada, the expectation, as we said, is another 75 BPS, 0.75% increase. So anything less than 75, I think, is going to be a dovish increase, which will mean weakness in the Canadian dollar and will probably mean a little bit more aggregated strength in the Canadian stock market. So for those who trade those asset classes, particularly for the FX situation with the Canadian dollar, very worth keeping an eye on movements today. So we've got the monetary report, we have the interest rate decision, we have the statement, and then we have the press conference at 4 p.m. So it's going to be a busy hour or so this afternoon. Well, realistically, it's going to be a busy couple of hours because the press conference generally lasts for anywhere between 30 to 45 minutes, and thus being an interesting one today. Now, of course, in the US today at 3 o'clock at the same time, we do have home sales, but all eyes will be on the Bank of Canada to see if they are going to continue with their hawkish approach to, I suppose, getting to grips with this ultra high inflation and raising these rates as high as possible at a quick manner in doing so. So that's I suppose where we are today for the Bank of Canada. Tomorrow, of course, we have ECB, which we'll be doing a separate video running that through. And of course, tomorrow we do have GDP. We do have a number of other pieces of data coming out as well. So we'll be looking at all of that collectively. Now, if we look at the markets, as we said, into today, or obviously into the Bank of Canada, as we said there, we are seeing yields top out. We are seeing the dollar on the back foot. So that's obviously quite important when you look at where we have been for recent weeks. So obviously last week we had that stalling out around the 113.50 to 114 level on the index. You can kind of see it here in the 4-hour chart. We have seen markets moving pretty back and forth. But of course, this week we've seen that new highs in the indices, which we'll look at now shortly. We are seeing the markets obviously take that instead quite nicely. So at this moment in time, we are trying to break through this structure here. So this structured low here is attempted to be broken. Of course, let's see how things play out today. Could we potentially see a break of structure? Could we potentially see a flag back up? Let's just wait and see. But at this moment in time, the last couple of days or so, since the beginning of week, Monday, Tuesday, and Wednesday, we have seen obviously markets follow through with last Friday's weakness towards the close of the week, and we are very much seeing risk aggregated aggression in these markets this week. Now, if we look at that, we are also seeing euro dollar propel higher. So euro dollar has moved very, very sharply from this 97.98 handle all the way back above parity again. Now, you'll also notice that the highs of October from the beginning of October highs of the 4th of October have now been taken out. So the markets has made new highs for the month of October. So the likelihood is now that we've taken new highs, you're probably going to get some sort of a pullback, but let's wait and see how this develops. Similarly enough as well with cable, If you look at the cable chart on, let's say, the 1 hour or the 4 hour time frame, you will see a very, very similar approach in the sense that this October highs, where we had that dead cat bounce recovery, has now been broken through as the markets has extended through this 115 handle. And that was, I suppose, the big focal point through the early parts of this week, was where we going to see that influx of sentiment out of the dollar into, I suppose, the hedging assets like your euro, your pound, your Canadian dollar, and also then your indices in the broader sense of the market. So that's effectively kind of where we are at the moment in the broader focal point. Now, of course, if you look at USD CAD, again, fairly similar scenario here. Now we have come back to this low here at 135. We are holding moderately above the 135 level. But if you look at the price action over the last few days, you will see how the markets has slowly but steadily made new successive lows on the charts, on the price action, and is now taking this bullish or bearish order flow to the downside. Now we have come back to this 135 area. So this area of interest here is really worth keeping an eye on today, because of course, if we get a dovish increase, well, then the likelihood is you're probably going to get a short snapback against the CAD back up into this region. So I suppose the rule of thumb today is with central bank, 50 basis points is obviously going to be dovish for the Canadian dollar, because you're probably going to get that snapback. 75 has been pretty much priced in over the last few days or so, and 100 would you with a 100 basis point increase in interest rate, so a 1% increase today would mean that you would definitely see movement in strength towards the Canadian dollar. So it's just understanding how, I suppose, the price points are reflected by the different elements of consideration within these fundamental markets. Moving across to gold. Out of the primary FX pairs, we are obviously seeing gold rally back up. So those lows have held very, very nicely here. So these lows around about 1620-ish has held very, very nicely. We did get a pop on Friday back into this 1670 handle. However, we did roll over temporarily. And overnight, again, markets has assumed additional strength, weaker dollar, stronger hedging against the dollar. And of course, we've come all the way back up into this into this 1 hour OB order block area. So we've come up, we've rejected this order block area, but if current sentiment is to continue, we should expect this to potentially break through. So I suppose at that point in time, it becomes a case of, will it take the liquidity here? So we've got these two wicks here at 1684 and 1682. The likelihood is if we do see that continuation in weaker dollar, you should expect to see those wicks probably been taken out in the liquidity. So worth keeping an eye on that today. This area of interest is going to be really important over the course of the morning and over the course of the afternoon, just to see, is there any sort of reaction of this level, and of course trying to get a clearer mindset of what's happening. So we've seen a very, very clear run up in the last 4 hours. The last 15 minutes or so, markets are coming to a little bit of a top around here, but obviously short term we need to see a little bit more of a decisional mindset out of this area of interest, rather than just plodding along with a selling position. S&Ps has, interestingly enough, has now broken structure. So if you're looking at these markets collectively, you're focused on the fact that the price action has now made new highs for October. We've taken out this 3,800 level here. So sorry guys, just let me just fix this up. If you look at the markets here now, the 3,800 level has now been taken out. Markets has steadily grown higher. So you can see here, manipulation on the downside, manipulation on the upside. We talked about it on Monday, flag back up, now creating that bullish order flow, higher highs, higher lows, creating that clear trending price action. We are creating a short-term top up here around 3,850. Could we get a little bit of a snapback? Let's wait and see. So we've created a short-term top up here at 3,850, 3,860. My perspective here is, given that we've now broken through 3,800, I'd like to see some sort of pullback to this region. So you've got obviously key area at 3,800 or the approximated region. You also have an order block area here at around about 37.85 to 88. So from my perspective, seeing how does the markets react, because we are getting that kind of short-term impulses as well, it would be lovely to see the markets make that short-term corrective move and then obviously reset and try and continue with this bullish trend. So worth keeping an eye on that today, just see how the markets react. S&Ps has obviously broken to new highs, as too has the NASDAQ marginally. So NASDAQ marginally got to new highs yesterday or very, very late last night. We did just about break through, but we have come back underneath, which is showing that the NASDAQ at the moment is struggling in comparison to the S&P and to the Dow Jones, which we'll be looking at shortly. But structurally speaking, I suppose, again, this is a testament to the volatility, the manipulation within the markets. Stop hunting on the sell side, takes the highs in liquidity, flags back into the lows here. And of course, then we start grinding higher consistently. So we're getting that bullish order flow, corrective movements. And of course, the markets has come all the way back up into this key level of interest. Now, of course, yesterday we were waiting to see, could we potentially break through this 11.6, 11.7 level and continue progressing up to the upside? And of course, the initial synopsis from last night's price action is that that's a negative. We have literally failed at this region. Of course, we have pumped up. We've initial sell-off back into this region of interest here. So I suppose this morning, it's just a case of how, and into the afternoon, how does this area here, short-term level, hold up here on the NASDAQ around about 11,400. So underneath 11,400 or approximately 11,400 is where we're holding at the NASDAQ at the minute. It would be very, very intriguing to see how does the markets react here, because of course we've popped up, we've popped back down, and now we're kind of creating that kind of bear flag scenario where the markets is creating a short-term impulse for the potential to ultimately hammer this lower again. So very much worth keeping an eye on this over the course of the afternoon, just to see how the markets develop. NASDAQ is definitely not as clear as the likes of the S&P or even the Dow Jones to a lesser degree, which we'll be looking at now. So if we move across to the Dow Jones, structurally speaking, Dow Jones has completely ramped through that October high. So obviously Dow Jones is the best performing index off the bottoms. Obviously that daily level held, as we talked about last week, we broke through this short-term level. We pulled back into this region of interest here. And of course, market very, very sharp bullish move here. So this engulfing candle here has taken out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 previous 4-hour candles of price action. And of course, that is the symbol that the price action went very, very aggressively on Friday to the upside. Since then, we've seen the markets just continually to grind higher. So you tend to find at the latter end of the move, you get a little bit more whipsaw back and forth movements. We're getting short-term highs, short-term lows, short-term highs, short-term lows. So you tend to see a lot of that playing out towards the end of the impulsive move. So I suppose from now, given that we've broken out of this, are we online for a little bit of a pullback in the indices, considering how much the dollar has weakened over the last 3-4 days? Could we potentially be in for a midweek reversal off of these lows in the dollar? Well, I suppose this 110 level on the index is really going to give you kind of a focal point in terms of correlation of markets to determine, are we going to get that short-term shift, maybe where we're a weaker dollar for the first 3 days of the week or since last Friday, and are we going to get a little bit of profit taken in those positions and maybe roll up to see a little bit of a pullback in dollar weakness? That obviously will be confirmed through the course of the day, and of course tomorrow as well, with ECB, with GDP, with all of these different economical figures, because these will be the catalysts. You can always see the price action developing on the charts, but the fundamentals will always be the catalyst for the aggregated move. Okay, and it's just important to be able to separate the both from each other. Now, moving to the DAX, very, very quickly. DAX is very, very similar to the Dow Jones, has broken through those early October highs, is still continuing to grind higher. So we had the order block level here in the 4-hour, very, very clear move, took new highs again, pulled all the way back into this region here, and of course is now continuing to grind higher on its way back up into this region. So this area here up around 13,300, 13,400 is what I'm looking at personally to see, can we mitigate, now that we are in a bullish phase of price action, can we mitigate all of this bearish order flow into this bottom, into this impulse order block rejection? So from my perspective now, can we get a move up into this 13,390 to 400 level? So this area of interest is what I'm looking at myself personally. It's now just going to come a case of having patience and having discipline. If you were to use your Fibonacci structures broadly, you would see how the dynamic is playing out quite nicely, in the sense that we have broken now into above the 61.8 into this 70,707, 786 level of zone of interest. And of course, the 88.6 does come in marginally at this 13,890 level. So as long as this bullish price action continues, let's just wait and see, because we are still seeing the order flow continue to the upside. We're still seeing those flagging structures, highs, lows, highs, lows, highs again. And we obviously had a little bit of a gap down overnight as well, of which has been closed, and the markets have made new highs. So we're still trending higher, but of course that dynamic can very, very quickly change with these markets. So it's just a case of being able to identify and understand the price action in the broader context. And of course, with the indices, of course, the Footsie has been very, very weak in comparison. Although we had that break and I suppose impulse through 6,800, we have come back, excuse me, back above it. We have come into the 69.50 level, taking the rest of the liquidity on the downside. You can see that there. And then we've got clear order flow. Short-term higher lows, higher highs, higher lows, higher highs again, into what's now been a very, very choppy couple of days for the Footsie. So you would have liked to see the Footsie continue to kind of trending higher, get back up into the 70, 80, 70, 100 level up here. However, that really hasn't happened because we've mitigated the 4-hour order block here. We have impulse to the upside. Now it's a bit messy and gobbledygook price action. You want to see clearer structure because it's effectively now what we're in is a holding pattern, because you can see here that we're creating short-term higher lows, but also short-term lower highs. So the market is becoming very, I suppose, consolidation and constraint within this, I suppose, area of interest here. So worth seeing. We could very easily come back into these lows here at 6,900, or we could very easily break to the upside and have an impulse at 71. When these types of positions generally emerge, it's quite difficult because it becomes a little bit of a 50-50 guess. You want to be making sure you have clarity and structure within the entry criteria on your trading plan. And that is obviously rule number one with anything associated to trading. Of course, obviously that brings us then to, I suppose, as I said, the central bank meetings. We've obviously got Bank of Canada today. Obviously very, very interesting article here as well that I've been kind of reading yesterday. Worth obviously kind of looking at that, and of course obviously getting ready for the rest of the week. So that's pretty much where we are for today. All eyes, I said, on Bank of Canada this afternoon. Of course, we will be back tomorrow for the ECB meeting, and we will be doing a wrap up on Friday afternoon, of course, with the back of the BOJ, on the course, the back of the German data on Friday afternoon, late Friday morning as well. All right. Have a great day, everyone. Trade safe.